Folks, earnings season is here, and my goodness, and my pump, we have a lot of companies to go over, a lot of charts to break down, and a lot of numbers to take a look at. So if you all find value, hit that like button, make sure to subscribe, and of course, if you guys have not gone up to 15 stocks yet from Moomoo, what are you waiting for? Use that Moomoo link down below, open up an account, you get one free share of stock. If you deposit at least $100, you get 4 more stocks, and if you deposit at least $1,000, you get a total of 15 free stocks, guys. No strings attached. Use that link down below. And now let's dive into it. And by the way, all those links down below, full disclosure, help out the channel. I appreciate you guys as always. So now let's just get into it, because again, earnings season is here and we have a lot of companies to get into with little time to waste. So the first company I want to talk about, guys, is Netflix, ticker symbol NFLX, who reports earnings, I believe, on the 18th, which is on Tuesday. Yeah, Tuesday after the bell, we have good old Netflix. So you guys can see here, this stock chart has slowly been reversing. We can see from the beginning of February pretty much up until the middle of March, this stock got beaten down roughly $100 a share. No joke. $93 to be exact. 24% is what it went down. So essentially it got into a bear market, and recently it's been rebounding. You guys can see we hit around 285. Now we're up to $340. We're actually up 18% over the past month, and now we're starting to see a little bit of resistance at about 345, 350, which you guys can see if I pull up this 10-day chart. That's been a sticking point for the past roughly 10 days. So for this week, guys, my alert set at 347.50. If Netflix could push through that point into the 350s, that's where we could get a legitimate reversal to the upside on Netflix. Maybe we start filling the gap at that point to about 365, which was the high from the middle of February. If that breaks, maybe we start going towards 372, 370. That was the high from early February. So we're pretty much one breakout away from this testing the highs from back in February. And they're again reporting earnings on Tuesday after the bell, and their EPS estimate is $2.85, and their revenue estimate is $8.17 billion, which would be up a whopping 3.9% year over year. So yeah, don't get too excited when it comes down to revenue growth year over year for Netflix, but of course, they're still going to be pretty profitable with, again, EPS being about $2.85. And mind you guys, these are all estimates. We don't know exactly what the numbers are going to be, but that is what's estimated right now for Netflix. So it's looking like it's reversing again. We are above the 180 SMA. We have a golden cross, but we have to wait and see if we get that push through $347 and preferably into the 350s. At that point, again, we could be running 365, maybe upwards to 370, maybe even higher than that. So next we have Tesla, which is on Wednesday. You guys know Tesla is reporting after the bell on the 19th, which again is on Wednesday. They're looking to do EPS of 86 cents on revenue of $23.34 billion, which would be up 24% year over year. Not bad at all, guys. In fact, that's pretty decent. But I guess when you're looking at previous years, yes, revenue growth has come down a little bit, a good amount actually. But who's to say it can't shoot up again in the future? I mean, it could definitely do that. Right now, though, revenue is starting to slow down. The growth is starting to slow down, but still 24%, not too bad here for Tesla. And you guys probably know, because I've made a good amount of Tesla videos recently breaking down the charts. You guys can see we do have a bit of a wedge here on the stock, right? We have higher lows being made at the same time as we're making lower highs. And at this point, we're pretty much right at a pivotal spot for direction. What direction are we going to pick, right? Are we going to fall through the bottom of this wedge, right? Start going under 175, 165. That'd be good, obviously, for the bears. Or are we going to retake these moving averages, start pushing 195, start breaking the wedge, and going towards 200? If that happens, guys, we can get a legitimate leg up on Tesla. And you guys know this stock is very volatile around earnings, and it could really go either way, which is why I have 4 alerts set at this point. Let me say my alerts again for all of you guys watching. 1 at 205, 1 at 195 on the upside here, and on my on the downside, 175, and 165. Let's see what direction we end up picking. So again, EPS 86 cents, revenue $23 billion roughly, up 24% year over year. And you guys probably remember we had JP Morgan last week, we had Wells Fargo, we had Citigroup, and I believe all those stocks went up. JP Morgan especially went up. My goodness, guys, 7.5% in the green for JP Morgan. I think Citigroup went up, 5%. Wells Fargo might have went down, actually, now that I'm thinking about it. Yeah, it broke even, went down about 2 cents. And this week, when it comes to banks, we have good old Bank of America. That's at least one of the big banks reporting. I believe MS is doing it, reporting earnings as well. Morgan Stanley, which we're not going to get into really in this video, but they're next week. Morgan Stanley on the, let's see here, what day is that? The 19th, which is on Wednesday. Bank of America, I believe, is also on Wednesday, or no, they're on Tuesday before the market opens. So BAC, of course, rallied because of the overall strength in the bank stocks on Friday, so that ran up 3.3%, and now it's right by the 180 SMA here on the 4-hour chart, which you guys can see has been a resistance ever since the whole regional bank crisis popped off about a month and a half ago at this point, roughly a month ago. So yeah, this has been under the moving averages for quite some time. Now we're starting to see a bit of inverse head and shoulders. You guys probably see that. We have the left shoulder here, boom, heads right there, boom, I butchered that, but bear with me. Then we have the right shoulder right here. So essentially, if we break out of $30, that right shoulder could really start to gain momentum. So I'm going to set my alert. Market is at or above $30 a share here on BAC. They're looking to do EPS of 82 cents on revenue of $25 billion, up 7.7% year over year. Not too bad. So the next company is Johnson & Johnson, guys. J&J. This company's been reversing ever since we got news that they settled on their lawsuit. I think it was like $9 billion around, their products allegedly causing cancer. So they got a huge settlement, I believe. I forget exactly the dollar number, but either way, that's kind of over with, at least for now. And the stock ended up soaring from 150 up to about 165. That was a move of about, $15, but percentage-wise, let's see how much that was. Probably 10%. Yeah, 10, 11% move there. Now we're above the moving averages. We're breaking out. We have a golden cross, all that good stuff. So J&J, guys, they're reporting earnings, I believe, on Tuesday. Let's see, though. Yeah, Tuesday in the morning, they're reporting. They're looking to do EPS of $2.51 on revenue of $23.69 billion, up 1.1% year over year. So essentially, they're going to be flat on revenue, year over year. But of course, they're very profitable. They're going to be paying a dividend, which is why most people invest in J&J. Let's be honest. Nobody's investing in this company for the price appreciation. They're investing in it for, well, the dividend and the safety of the stock. Although no stock is truly 100% safe, J&J is as safe as it gets. One of the safer stocks out there in the stock market. So for me, guys, I think it's a little bit overbought. I'd wait and see if it pulls back. If it does, maybe towards 160, 155, 158 roughly, that's where I'd pull the trigger. But for now, I'm being patient on J&J. So we also have good old Procter & Gamble, which pretty much everything I just said applies to Procter & Gamble as well. Nobody's investing in this for the price appreciation. They're buying it for the dividend, for the stability, and really just for the long-term, outlook of the company, because they own so many brands, so many products that are just essential to the everyday life of people out there. So this business is truly recession-proof. It's consumer defensive, right? It does well in any environment. And at this point, that's why people invest in Procter & Gamble. They're reporting earnings on the, 21st. So that is what? That's Friday. So they're on Friday at the end of the week, guys. They're looking to do EPS of $1.32 on revenue of $19.29 billion, down 0.5% year over year. So don't expect anything crazy on the revenue side of things here for Procter & Gamble. And they did go down a little bit on Friday. The stock went down 0.5%. And quite frankly, now that I'm looking at this chart, we're very overbought. Even though we're above the moving averages, we're looking pretty bullish. We're overbought and we're approaching a massive resistance from a couple weeks ago, which you guys can see is right around here, 153 to about $155 a share. And if I pull up the 3-year chart, you can see we're also arguably, if I show you this, well, not arguably, we're clearly at a lower high at this point, which is not the best sign for the bulls, right? We're overbought heading into earnings. And, listen, if earnings aren't as good as expected, we could start to see some selling at that point for all we know, right, guys? So I'm going to set my alert. I might as well have one at 155 just for the sake of having it. If we do break out of that level, great. If not, that's fine too. So I'm going to set one at 155. Mark is at or above. And again, for EPS, they're going to be doing $1.32 on revenue of $19.29 billion, which would be down 0.5% year over year. So this is not in the best setup heading into earnings, at least in my opinion. That's just my opinion, guys. What do you think? Let me know down below in the comments. And by the way, if you haven't hit that like button yet, if you haven't subscribed to the channel yet, do that. We're almost at 30,000 subs, which is the short-term goal here. Then we're going to hit 50,000. So make sure to subscribe. Again, hit that like button. I appreciate you all as always. It really helps me out overall in the YouTube algorithm. You guys are awesome. So the next stock here is good old Lockheed Martin. Let me pull it up. Ticker symbol LMT, which is also pretty overbought heading into earnings, and it's also at a pretty tough spot right here. Big resistance at about $495, $500. That's been resistance since October, so you guys can see that if I draw it out. Boom, big resistance. But Lockheed Martin, look at this. We also have higher lows being made. In other words, we do have a pretty nice overarching ascending triangle here on the 4-hour chart with earnings coming up. I think on, let me see, Wednesday. Let me double check that. Actually, no, Tuesday. Tuesday morning, we have Lockheed Martin reporting earnings. So they're going to do EPS of 606 on revenue of $15.04 billion, up 0.5% year over year. Pretty flat. Just like Procter, just like Johnson & Johnson, Lockheed Martin's going to have pretty flat, revenue growth. So I'm going to set my alert at $500. Mark is at or above, and we'll see what happens at that point. If it breaks out, we get that leg up. That's going to be awesome. Where could it go from there, you may ask? Well, listen, we're going to be at all-time highs. Believe it or not, Lockheed Martin right now is near all-time highs. And it's one of those stocks that's in a stealth bull market, and it's been doing very well over the last couple of months. We're literally one breakout away from seeing a massive leg up. I think this could go towards the mid-500s for all we know. I mean, that's where this thing could be going. So LMT, keep your eyes on it. And before we continue on, guys, have you gotten up to 15 stocks yet for Moomoo? If you haven't done that already, use that link down below. Open up an account. You get 1 free share of stock. If you deposit at least $100, you get 4 stocks, 4 more stocks, totaling 5 free stocks. And if you deposit at least $1,000 onto the Moomoo platform, you get another 10 stocks, totaling 15 free stocks. And by the way, it's not like your money is tied into Moomoo forever. If you don't like the platform, you can take out your money and you keep all the free stocks. You can finesse the system if you want. It also helps out the channel, guys. I appreciate you all as always. Again, use that link down below. You guys are awesome. And with that being said, let's talk about 4 more companies that are reporting earnings this week. The first one out of the 4, well, I guess technically it's the 7th stock. Either way, guys, the next stock here is good old SCHW, which is Charles Schwab, which kind of got caught up into the whole financial mess that started about a month and a half ago. This got caught up, and the stock, believe it or not, was $86 before the whole, regional bank debacle, and it got down to $44, guys. We're talking about Charles Schwab here dropping 50% in the span of 2 months. I mean, if you told the CEO of Charles Schwab that, if you told, some guy on Wall Street or a retail investor or whatever, right, they probably wouldn't have believed you, but it happened. Charles Schwab went down 50%, and honestly, it really has not recovered at all. I mean, now it's at $50. Sure, it's recovered 6 points, but still, that's nothing compared to where it was. It's still down from 86 to $50. It is down 42% from that recent high. So Charles Schwab's reporting earnings, I believe, on Monday, actually. Yeah, Monday, tomorrow in the morning. So this is actually the first company that I'm going to be looking at tomorrow, no doubt. EPS is looking to be 90 cents. Revenue is looking to be $5.15 billion, which would be up 10% year over year. Not too bad there for Charles Schwab. So I'm not rushing into this. I'm not really looking at it as a trade either. If anything, maybe a long-term investment. I haven't really considered that yet, but at these levels, there's got to be some value, right? So keep it on your watch list, guys. Charles Schwab, SCHW, they're reporting earnings in the morning, and we also have Zions Bank Corporation, I think WAL as well as this week, which is Western Alliance, another regional bank. Yeah, Western Alliance is on, let me see here, the 19th, which is on Wednesday in the morning, so watch out for that. And again, Zion's is on, let me see here, probably Wednesday as well. Yeah, Wednesday after the market closes. So Zion's Bank Corporation has been consolidating for a couple of weeks here, right around $29-30. So if we do get some good news out of the earnings, out of the earnings call, I don't know, maybe we start to finally get that break back towards the mid-high 30s, which is where money could be made here on Zion's Bank Corporation, ticker symbol ZION. They're looking to do EPS of $1.52 on revenue of $844 million, up 23% year over year. So I'm going to set my alert at around, let me put it at $32, which has kind of been the top of this range over the past couple of weeks as we've been consolidating, right? So I'm going to do it at maybe $32.50. Mark is at or above $32.50, and we'll see where it goes from that point. And we also have AXP reporting this week, which is American Express. Let me pull this up, guys. Ticker symbol AXP, and this is one that's approaching a big level right now. Massive level of resistance right around $165 a share. That was the high from back in August, September, back in, the middle of December, and literally in the past couple of, weeks, 2, 3, 4 weeks, we've been struggling at about $165. So if that level breaks, I'm going to set my alert there now, right around 167. AXP could really start to take off, maybe past that 180 SMA, towards 175, 180. Maybe it goes even higher than that. So AXP looks pretty strong at this point. EPS is looking to be $2.66 on revenue of $14 billion, up 19% year over year. So this looks pretty good. You could argue that's an ascending triangle on AXP. Let's see if that ends up playing out. And the last one is, last but not least, and by the way, let me know in the comments if you guys stuck till the end, it is United Airlines, which we got news that American Airlines is, I think their profitability is not going to be as good as expected. The stock ended up tanking last week. I think a lot of these did. DAL fell as well. Actually, no, that was up on Friday. Either way, I think it was AAL that collapsed. You guys know, we talked about it last week. You guys probably remember. And UAL is going to be reporting this week, later in the week, maybe on Thursday. Actually, no, they're on Wednesday. They're on the 19th in the morning. They're looking to do EPS of negative 73 cents. So they're going to be losing money on the quarter on revenue of $11.42 billion, which will be up a whopping 51% year over year, which is the biggest revenue jump out of any of these companies we've talked about today, although all these are unrelated. All these companies are very different from each other. In terms of the biggest pop in revenue year over year, the cake goes to UAL, guys. The title goes to UAL, up 51% year over year. But looking at the chart, what makes me a little bit nervous is this head and shoulders that we have here on the 4-hour chart. You guys see it, right? Left shoulder ahead, right shoulder. We're clearly failing at the neckline. So what are we going to do, guys, moving forward? Are we going to break back over 45? Break that neckline, break the 180 SMA, start going 50, maybe even higher than that? Or are we just going to completely free fall and have that right shoulder play out, which is very possible? And let me see. UAL is reporting earnings on, Wednesday. I think I already said that in the morning. Either way, a lot of earnings this week, guys. You better be ready. You better subscribe to the channel as well, because once these earnings actually come out, once we see price action, we're going to be breaking all these stocks down on this YouTube channel. So you're going to want to subscribe. You're going to want to hit that like button. You're going to want to let me know your thoughts in the comments. And of course, you're going to want to get your free stocks. Up to 15 stocks from Moomoo and 12 stocks from Webull. Link down below. And if you guys like the way I break things down, you want to see more of that, there's way more of that on Patreon. You also get access to my Discord, and you get access to my Patreon portfolio, plus more on Patreon down below. And with that being said, cheers, guys. I need some water, man. I'm thirsty. I'll catch you in the next video. Peace out.